for digital service tax and for a normal business. So, so you're selling the domains, you're doing online data, you're doing file sharing, and you're charging. So if you go online, you're going to see platforms that offer even data storage. They charge you per month. They give you a service, bulk SMSs platform. They give you an email platform that in a month you can send 20,000 email to your customers, but you need to pay us 500 shillings or 1,000 per month. So that is digital. That is a digital platform that should be paid for digital service tax. Electronic books or electronic ticketing services, including the online sale of tickets. So the online sale of tickets, possibly there's something that you're doing, or you're doing a tour and then you sell the electronics online. There are people, there are spaces where they tell you you have to go online and do the ticketing and do the payment online. Provision of search engine and automated help desk services, including service of customized service engine, search engine services. So the search engine services also online distance training through pre-recorded media or e-learning, including online courses and trainings. So I've also mentioned that where you have trainings, you are in a school, you're doing online trainings pre-recorded. And when we talk about pre-recording, we mean that someone pays for this service online, then the pre-recording, the moment they do the payment, the pre-recording is able to flow to them. It's able to open to them. So also that any other service provided through a digital marketplace. So those were just examples. And I know some of you will tell me we just do online marketing and then we proceed with the transaction in the normal way. So if you do that, you can still do the corporation tax, because when we consider digital service tax, is an advance payment. At the end of the day, this person is supposed to also do the corporation tax. The digital service provider shall be subjected to digital service tax if they provide or facilitate provision of service to a user who is located in Kenya. So the location is Kenya is very, very important. So how do you determine that the user is located in Kenya? So all of this we are using it that way. But also, if you're selling ebooks and some of these services, and you are resident in Kenya and you're earning that money and you're getting paid in the Kenyan accounts, then you're supposed to pay for the digital service tax. So most of the time you find, if you're doing a service or someone bought something from there's a business, and possibly someone bought something from you and in a foreign country, you find that there's a double treaty agreements. So most of the time you find that out of that fee, there's a fee that is chargeable to that country. But for you, when you receive the money, then you treat the money as your sale and you proceed with the digital service tax and the declaration of incomes. So digital service tax is exempted for the following services. So what are those services that you can do and you can be exempted? So what are these services that you can do and you can get a bit of an exemption? Online services which facilitate payments lending or trading of financial instrument, commodities or foreign exchange. So financial institutions like M-Pesa, these are online platforms. So financial institution, they are facilitating, they are not selling something, they are facilitating the payment or lending. They are not chargeable to digital service tax. Otherwise, most of these facilitating of payment is chargeable to excise tax. So lending, trading, those ones, they are chargeable to excise tax. Financial services, okay, all right. Online services that government institutions provide. So we also have online services like eCitizen. So if you're buying something, you're using eCitizen platform, there are payments that you do. As in the whole cycle is there. So this service is online, you order it online, you do online payment. So the full cycle is complete of a digital marketplace. But this service is provided by government institution, then it is not payable to digital service tax. And I've given an example of eCitizen services, which we pay for. Income that is subjected to withholding tax in Kenya. So if you do a service online and that service was chargeable to withholding tax, so the withholding was done, 5% the withholding was done, then you can still be exempted from paying digital service tax, but corporation tax has to be done. Income of non-resident person who carries on the business of transmitting messages by cable or radio communication, optical, fiber, television, broadcasting, very small, that one, VSAT, internet or any similar communication. So transmitting messages. So this was put here to promote the transmission of messages. So it is transmission of messages which is being exempted from digital service tax, and the person should be, or the company should be, non-resident company. So I've talked about the rate is 1.5% of the transaction value. I've said the value is gross. So if you did a service or people are buying an online course, 5,000, then the whole money is 5%, 5,000 is chargeable there, 1.5%. So if it is money that also you are receiving, there's something that you're selling, you're receiving the 1.5% of the gross value. So before I come to show you how you're supposed to do it in the iTax portal, I want to show you how to do the digital service tax in the iTax portal. Possibly I can see what so my co-host is saying you register. When you register on the platform, I will be able to send you the notes. So if I do remote bookkeeping for non-resident companies, when paid should raise ITIMS invoice, raise DST payment order on iTax, then pay. Evans, that's a very good question. So I do remote bookkeeping for this company. So the company is not resident in Kenya. When paid, should raise ITIMS invoice, yes. Raise DST payment order on iTax, then pay. Okay, so first of all, the reason why you are raising ITIMS invoice is the invoice is supposed to show how much money you made. So for you, ITIMS is just to notify KRA that I have a client and this client have paid me 50,000. So you are raising the 50,000 invoice for the client to pay you, because eTeams invoice is a normal invoice. The only portion is that now KRA gets alert that there's some money that you're expecting, or there's some money that you have received. So that is eTeams. So the moment they know, that is okay. But now the importance of having eTeams and DST is the moment now you paid that 100,000, you're going to do 100,000 multiplied by 1.5% when you're now paying DST. So KRA will know that you've been paid 100,000. So that is the essence of eTeams. Now that 100,000, now you have paid the 1.5% DST. And let me also ask another question. What is another tax that your sub-tax that is at 1.5% per month on gross turnover? So what other tax is on 1.5% on gross turnover? So that is a question that I'm posing to the audience. So the other tax that is at the moment 1.5% on gross turnover is turnover tax. So, and I also mentioned on when we were doing the finance bill, that was last week, I mentioned that the turnover tax was at 3% on gross turnover. It was on gross turnover, but in March, through an amendment, it was amended to 1.5% on gross turnover, then another 1.5% on housing levy. By the way, I should have also checked that if you can still do DST and still do housing levy. Because housing levy is on all businesses, 1.5% on all businesses. So if you're not going to pay if the company is not, this is what I said, if the company is not paying housing levy for its employees plus the director, so there's a housing levy that you're paying on your salaries, then that business should pay 1.5% on the total sales. So either way, the business should pay housing levy. So housing levy is on all businesses, whether digital, whether physical businesses, housing levy should be paid. And also for rental businesses. So the same way that someone is doing turnover tax, the same way you're supposed to do digital service tax. And the difference is that for digital service tax, you also have to do corporation tax. For turnover tax, it is a final tax. It is final. So let me proceed to my I want to show you how to file it. So you can keep asking questions, I'll keep answering. So this is how any business that is subjected to digital service tax is required to register for digital service tax obligation. So there is a registration you're supposed to do. The same way we do pay registration, income tax registration, you can still choose to. You still have to do a registration. So you can see here, this company has done the registration. So there's the digital service tax written there. So when you come to do the payment, you look at the portal, like here, log into the iTax and click payment registration. So here you can see where I've circled. You can check there. And then you come and indicate. So this is the place where you're going to see. Of course, there's a taxpayer's address, income tax, tax head. So you're going to choose the income tax, and then on the subhead, you choose the digital service tax. So the payment type is self-assessment. And I said the self-assessment is where you're indicating the truth on the iTax portal. So you're self-assessing yourself. And then you declare the time period. Then you say the monthly turnover value. So that is where, when you see the red portion, is the monthly turnover value. This is where I say, now you're going to indicate, for instance, this, I guess, is 1 million. This, you're going to indicate that 1 million. But if you did the items invoices, and this is where the catch is, the items invoices has to read the Z report for that month has to read the 1 million that you're going to declare here. Then you do the rate is there, constant 1.5%, and then it's going to auto-populate the data. So you're going to okay, the payment, and then the payment method, and then you're going to submit, and you're going to get the payment slip. So you're going to get the payment slip. So that is a bit about the digital service tax. I hope you've been able to understand. For people who are doing businesses that you're just using the platform to market your product, remember Facebook boosting is chargeable to 16%. So it's quite expensive. So if you're doing boosting 10,000, I also said you have to get the receipt from Facebook. Facebook gives you a receipt because you also need to justify where the money is going to, so you can get a receipt. So those boostings, they are chargeable to 16%. Then, so you're just marketing your company, then the customer is able to come to your organization and buy. So through that, now you're going to go through the normal buying and selling, and at the end of the year, you do the corporation tax. So for people who are doing gambling, also when I was asking what kind of businesses do we do, we felt like gambling was supposed to feature here, because remember, you're using platforms to gamble for football and others. So you're going to pay via online platform. Everything is online. So what happens at that particular point? So when you're getting a reward or when you're gambling, there is an excess duty that is chargeable to this organization. So they are going to pay 15% on behalf of that money. And right now, the Finance Bill 2024 want to introduce 16% on those on the gambling and Rotary activities. So I want to proceed to other taxes. So, and before I proceed, a challenge on their side, but remember, this is something that is online. You're doing an online activity. It will always come back. So no, it is the invoice provided. So so for me, I would say, what about you can opt to do the digital service tax, that is on monthly basis on the money received on your account, or you can do corporation tax, because this still a normal business where you can have your money received, then you can have the expenses and you pay the corporation tax, or if you're paying it as an individual, you do the graduated scale. So when you're doing the income tax of an individual, there's a graduated scale that we fill in. So, and then also when I talk about money, you receiving money online, especially from clients overseas, there's the money laundering acts and money around that place. So this is a very sensitive area. The people that I've seen receiving money possibly is because when you're receiving very small amounts of money, there is no so many issues. So they always raise those issues. So if you're receiving money through online writing, you find that this money is sent to a platform and then it is sent to you. So there's always there's always a checkup system on what is happening. If you're even sending money via Western Union or you're receiving via Western Union, there's a lot of paperwork to be provided on what services are you offering, what are you doing for you to receive this money. So what I would say, just make sure that you are able to do your calculations very well, because you don't know the day that you'll be required to show what activities you do online for you to receive the money. So just comply now that there are not so many issues, so that you can be able to show businesses. So we also having other people who do forex trading. So they do forex trading, and they do Bitcoins. So they also do, especially at the moment that you're doing withdrawals, there are excise duties that you're supposed there are excise duties that are supposed to be paid at that particular point, especially when it comes to financial services. But also at the end of the year, you need to show, because this is the money earned. So you also need to do the right taxes for those earnings. So I hope you've been able to understand the digital service tax. So if you didn't, you can share on the chat and then I can explain further. So let me come to a bigger business, possibly now, the business that you're doing, the online writing or the whatever that business, let me use that one. You have staff within the organization that you're doing this business. And you may even find that these people are even operating remotely, that they are working at home. They are not even a resident in the company. They're just you get work online, then you supply the work. So if these people are now employee of the organization, you have to do pay as you earn. So you have to do pay as you earn, and 24,000 and above paid. If you're paying them 24,000 and above, you're supposed to pay the pay as you earn. And of course, when you do pay as you earn, we also include housing levy. We have NHIF, we have NSSF, and we have NITA. So all of them accompany the payroll. So, and I said here, for housing levy, you have to do it under employees. If you have employees within the organization, and you as a director, you're also an employee, you do the housing levy. If you have a small business and it is only you alone, like now you are doing this online writing or this digital places, and it is only you. So at the end of the month, you're receiving, after doing the calculation of everything, you have received, for instance, 300,000. Let me give an example. You've received your 300,000. You've been working online. You can first of all choose to do the digital service tax, the 1.5%, and you're also supposed to do the housing levy. You're also supposed to do the housing levy as 1.5% of the gross revenue, or the gross sales received, or the gross commission or fees that you have received. So you have that option. So if you're having employees, it is important. So if you're having other people who come on timely basis, possibly you have a project, you've been making softwares, and so they are coming because you overloaded. They come a week and then they go. If their wages, you're supposed to clearly show the wages sheet, how much they earned, and also their signatories, because I said at the end of the year, we are supposed to do corporation tax and we are supposed to show VAT. So if you're offering vatable services or vatable goods online, you also have to consider VAT. So most of the time you find, like for instance, now the Facebook boosting, the what do we call it? Inaitwa Meta. When they need to operate in Kenya, there is an agreement that for all the boosting that is going to be done, there should be a 16% that is supposed to be charged. And that 16% is now paid to the Kenya government. So when you yourself, you're paying for that service to boost, if you check your slip, it will write a VAT. You can even claim input that VAT element, you can also claim on it. So you can also offer such a service and or goods online that are vatable. So, and the threshold is 5 million. So the moment you're doing those threshold, you're supposed to also charge VAT. So for instance, if you're offering an online, what good example will I give? Let me go back to the examples I had provided so that I can give a very good example. So sale of license. So if that sale of license you're selling is vatable, then you're supposed to, when you're selling it, for instance, you're selling at 2,000, you're supposed to charge 16%. And when you receive those payments, you're supposed to pay for the 16%. So you do the normal VAT return. And also, I'm also being told there are people who are also having TikTok accounts. I don't know if they are here. And you're receiving money out of the account. You're also supposed to account for that money and pay the correct taxes. So for corporation tax, if you're a company and you're in the digital space and you pay for digital service tax, we also pay. We said it's acting as an advance tax payment. So you also come and do corporation tax. And this one, you're going to incorporate expenses. So that all the money that you received in a year, you incorporate all the expenses, could be rent, could be salaries, fuel. You incorporate all the expenses, even subscriptions, all of them. The net profit that you're going to get, you charge 30%, and then out of that tax, you can deduct the digital service tax and then pay the remainder of that amount. And it's supposed to be done on the 6th month. Actually, for most of the companies at the moment, which are January to December, this is the time I'm hoping you've done your audit. So if you've not been able to do your audit, we can do it for you at affordable rate. So we are doing it at affordable rate. I'm going to share that at the end of the session. So for individuals, so this is corporate tax for people who are doing these digital services and you don't have a company. So it is you yourself doing it. You're supposed to declare the business income. Of course, I'm hoping you're doing digital service tax. At the end of the period, then you're supposed to declare. Then on the iTax portal, you don't find new return. You've been having business income, so you cannot do a new return. So you file for business income and then you pay for the correct taxes. So for housing levy, so I've been talking about housing levy in the previous. So for companies that have employees, it's 1.5% gross monthly salary and matched by 1.5% by the employer. So the total is 3%. So it's filed and paid by 9th, filed together with payee, and there's a penalty on the unpaid amount. So that was it. And then I also mentioned something about if you don't have employees. I guess that one I've mentioned. If you're the only person or you have a sole proprietor, you're supposed to do 1.5% on the gross sales. For rental properties, also 1.5 on gross rent received. So steps of filing housing levy with no payee obligation. I was told that this is something that we should mention because we've not mentioned. Because housing levy, when it started when we had the payee obligation, but now we are having people who don't have the payee obligation, yet they are having people who are employed. So log into iTax portal with your PIN and password. If you come on Friday, I'm going to demonstrate. At the moment, I did not demonstrate this portion. Navigate to the payment menu and select registration. Click next to proceed, then tax head. Then you write tax agency revenue, tax subhead is housing levy. It's pretty simple. It's not anything complicated. So you can pay the housing levy and you don't even have the payee obligation. So what are some of the key tax compliance guidelines when it comes to the digital service businesses? When it comes to digital businesses, what are some of the key tax compliance guidelines? So for you to operate in the correct manner, that one day you will not be having tax demands that you cannot be able to explain. So how do you comply? Through understanding of your business obligations, thorough understanding. So understand when should you pay digital service tax, when should you pay corporation tax, are you liable to pay VAT and others. So at what particular point should your business now graduate to do VAT, and at what time should you do payee? So sometimes you may find businesses that are having so many employees, but they have never registered for payee, even a director. The director is an employee of the organization. So you find they are not even doing payee at all. So understanding the implications for these obligations and being able to incorporate them. Maintaining accurate records. Remember, for corporation tax, we have ETIMS, and ETIMS has a regulation that for you to claim a purchase or to claim an expense as a deductible expense, then it should be ETIMS compliance, meaning that you have to issue invoices, ETIMS invoices for your sales or ETIMS receipts. Then when you receive it, you should also receive payments, or you should also, when you've done your payment and now you from your suppliers and wherever you're doing your purchases, those receipts and invoices should also be ETIMS compliant. So with that, you can maintain accurate records. Record keeping is very, very important. Otherwise, you'll not be able to explain your tax issues if you don't have the records. Ensure timely and accurate filing of returns. Being able to file accurately. Explore legitimate tax planning strategy. There are planning strategies that you can use. So are they legitimate? Are they okay? Are they implicating you with with so many things? So being able to understand, engage a tax professional or consultant to ensure your business is fully compliant. If you don't understand tax issues, or you get into a point you cannot be able to explain how the business is, you can also, or you've been not able to understand which taxes you're supposed to be paying, you can talk to a tax professional, and that's who we are. We can help you, and we can help you to be compliant. Regularly check the official communication from KRA to stay updated. So, so if you have an email registered with your PIN, are you able to open and see if KRA sent you a letter? So sometimes we go to clients and they send us, client will send us letters and agency notices that their bank account has been closed or inactivated. And I tell them KRA will not do that if they don't give you communication. So at the point where they open the emails, they find that there was a communication done like as for 3 months, there was an email being sent to them and they were not able to respond on time. So regularly check if there is any clarification they require, any documentation, be able to provide it within the stipulated time. Respond promptly to and accurately to KRA upon request of information. So if they ask you any information, kindly be able to provide within the right framework of time. So someone is asking, let me answer a question before I proceed. Please go back to the levy, housing levy. Let me see if I can. Is it possible to get the slides after the meeting? Yes, and there was a link to register so that we can share the notes. Merely sharing invoices over WhatsApp or is not digital service. The service has to be offered on digital marketplace. So Evans is true. So sending somebody an invoice via WhatsApp doesn't mean that you're doing a business on digital service. So the service has to be offered on digital market. So when we talk about a business that is fully digitalized, I gave an example of online recording. Like if, for instance, this recording that I'm doing here, we are able to sell it online and have people pay through PayPal, and after they pay, they receive the possibly there is a code, or the online class is activated so that they can be able to learn what we call the digital marketplace or the digital space. But either way, we said whether you're doing the business digitally, full digital, you pay digital service tax is an advance of corporation tax. So either way, corporation tax is a must. Any direct allowances and travel subsistence subjected to taxes. Yes, directors' allowances, directors' fees are subjected to taxes. So travel subsistences, where are they traveling to? Is it for their families? It is for the furtherance of the business? So if it is for the furtherance of the business, that is an expense, is an allowable expense to the business. But if they are being given that money as to go somewhere for their is a package for as a benefit of them being a director, then those ones are subjected to taxes. So my co-host, you can share the link to receive the slides. As a director in a company and has no employees, can one choose to pay themselves dividends, which is charged at 5% as opposed to a salary? So you do the 5% dividends. So this is my 6 cents. First of all, the 5% the withholding on the dividends is termed as final tax. So how will you? Let me get to there. So so how will you show money that you're receiving, or you're not going to receive anything until the end of the year? So I'll come back to that. So first of all, that is an area that can really open up to so many queries. I always say some of these things we do are tax triggers. They act as tax triggers. So, and that's why you find a company doing that. They don't want to do pay as you earn. They want to hire people as consultants and start doing withholding 5% per month. That becomes an audit trigger. Some of these things you'll be really audited because of doing some of these, because the system is able to generally show that this is what you're doing. So those are some of the things that are you should be extremely careful when you're doing it. So if you're a company and you don't have employees, why don't you declare business income, declare corporation income? So if you've registered a business and is a sole proprietor, just declare under your PIN that business income with expenses and pay the correct taxes, or just declare possibly the company was in a loss. So there are so many ways out of it. Please clarify again on the treatment of affordable housing levy for companies without employees on pay but pays consultation. So without employees on payee. Okay, so I've said if you don't have payee as an obligation, you can still do affordable housing levy. And I showed there, I demonstrated a bit. Possibly I'll go back and demonstrate. And the affordable housing levy doesn't have a capping. So, and first of all, who are you going to be paying affordable housing levy? Without employees on pay. So you don't have pay as an obligation, but you're having employees. Possibly these employees are not on the threshold of the 24,000. that's okay. You can still do the affordable housing levy. But this is what I always say when it comes to pay as you earn. If the director of the organization is an employee, is reporting to that business every day, you should be able to do pay as you earn and start. Even if you incorporate the director there and other staff, it is very, very important. Then you continue doing the affordable housing levy. And then if you're having 3-4 employees and they are not on the threshold of 24,000, you can still incorporate them there. The advantage is to show that you are having employees within the organization. So you are having 5 employees. One is the director, of course, and the other 4 are other employees. Possibly the other one is a manager of the overall person. Possibly they are being paid 30,000. The rest are being paid 20,000, 22, 15,000. You can have all of them under the pay as you earn to show the salary cost or the salary expense that you have in the organization. The advantage is at the end of the year, when you be showing your salary expense, then KRA can be able to understand that all this stuff you've been having there. But when you come to the end of the year and you're declaring a salary expense of 3 million, yet you don't even have a payee obligation, that is an audit trigger. So if you want to be compliant, I always say it is very important to have it. Okay, so Evans government services offered on eCitizen qualified as digital, but they are exempt from, yes. I say they are exempted because they are government services. I mentioned it as one of the exemptions. Tax charged on pay, okay. A new company started and they issued several invoices, but payment have not been received. Where will the tax money come from? Okay, okay, okay. That's a nice one. Let me say, for that who is battling that, okay. So for someone who is battling that portion, that you've done invoices and you've not been paid, this is how the act says, what is the tax point? The tax point has been defined as 3 spaces. So whatever happens the earliest. So the earliest of you issuing an invoice, so invoicing, you getting the payment, that is the next one, you getting the service or the product or delivery of that what you're paying for or what you're looking for. So the goods or the service. So for you, for instance, here, you did an invoice, you've not been paid. And possibly you've not even been paid. So that because you generated an invoice, whatever happened earlier is the tax point. So you may also have a person who receives a payment. So they say, before we start this project, you have to pay us. So they've not even raised an invoice. They have not even done the work. So they have received a payment. So that is a tax point. You have sent an invoice, you have not received the payment. Possibly you've done that work. So that is the tax point. And there are other people who receive the goods or they receive whatever they were looking for. Or, yes, and yet there was no invoice provided, no payment done. That is also the tax point. So whatever happened earliest of. So even if it is a credit sale, it is still termed as a sale for tax purposes. So for tax purposes, a credit sale is a sale, and whether you receive that money or not, you're supposed to account for taxes. So a secondary employee is subjected to NITA deductions. So if they are secondary, where are they primary employees? If they are primary somewhere else, then that place spaces, that place where they are primary, they can do the NITA deductions there. The I page for iTax. Let me see this one. The final one, I continue with the training. Yeah, someone is saying possibly, yes, the safest way is to issue a pro forma invoice. Yes, that is very good. Issue a pro forma invoice before you issue. When you receive the money, you issue a ITIMS invoice. Kevin, just issue for instance, let me talk about and this one I'm moving away from what we have been talking about. For construction especially, you may find that you did a contract and the government body or the parastatal is telling you you have to give us an ITIMS invoice for us to do a payment. So you issue them an ITIMS invoice, and this is in invoice. You also calculate the 16%. And you're supposed to pay for that 16%. And they pay you after 3 or 4 months. The law says you pay for that 16% before that time you do the ITIMS invoice. And then when you receive your money, you're going to return your money in your bank. So sometimes it's quite complex when you start thinking about that. So you just need to plan on how you do your business, depending on the nature of the business. There are businesses that are able to sell on cash. There are others that are they have to issue an invoice, wait for payment. So just organize your business in the correct way so that you don't crumble when you're paying taxes. So with ITIMS, how do you treat payment to CASHOS in order to claim as a deductible expense? So I'll talk about ITIMS right now. Because emoluments or salaries and wages are exempted from ITIMS. They're exempted. So I'll talk about what is exempted right now. Possibly that will feature there. There's something I wanted to. I import used cars for sale, probably 10 units. The value. Am I supposed to issue ETR invoice to client? Yes. Every business should be should use ITIMS. Actually, Stephen, when KRA officer will come to your organization and they don't find the ITIMS, you using ITIMS to do invoicing, they are going to charge you. And the penalty in the Finance Act, the Finance Bill 2024 has been proposed to 2 million. 2 million for non-compliance. I'm a consulting and I have a client who is in Ghana and they want an invoice. Do I still give them an ITIMS invoice? If I do, what is the tax implication? So they are in Ghana, they are doing consultancy. So if you do, that is an export. So that is an export service. So export is a service. It's like you're exporting avocado, you're exporting your consultancy services. So that is chargeable to, that is zero rated. So you issue them an invoice, an ITIMS invoice that is zero rated. I guess from there, let me go back. I'll be able, if I've not answered your question, when I will go back to the questions, you can possibly signal or write it again, and then I can be able to. The iTax does not allow for affordable housing for VAT, TOT, and MRI. Kindly clarify. So, Daniel, all these taxes you've talked about here, they are different. They're different taxes on different businesses. So the affordable housing levy is different. VAT is different. Turnover tax is different. Monthly rental income tax is different. So all of them are different on different businesses. So let me go back. Let's continue possibly for the next 15 minutes or a few minutes. Then I continue answering your question. So we've talked about being tax compliant and the necessity. So right now we're going through a very period that requires a lot of compliance. So kindly push your business to become compliant. And if you get to a point where you don't understand all the issues of tax, by the way, my co-host, you can share a free calendar. The booking, we are having a free booking. So you can consult for us free of charge. So there's a link that is shared. Just do a booking there and somebody is going to answer all your questions. And also, we can also see how we can work together. So understand the digital, so tax planning for digital businesses. So understand when to and at what time. It is paid on a monthly basis. That's what I mentioned. And make sure that you're also able to follow all the regulations available. So eTIMS is a platform, is a digital platform implemented in Kenya. And I've also said that also you who is doing digital business, you are supposed also to do the digital, to offer an eTIMS invoice. So the eTIMS invoice, at the moment, penalty for non-compliant is 1 million. So it's pushed to 2 million by the Finance Bill 2024. So the exemption for eTIMS include emoluments. So this is salaries, these are wages, and those allowances. So, but for those, I said, because for you to claim an expense, it has to be eTIMS compliant. So the purchases and the expenses. So for expenses, it has to be under pay as you earn. Otherwise, if they are not under pay as you earn and you claim a salary expense, it's going to signal for tax compliance issues. Then when it comes to cash flows, you have to prepare the cash flow wages sheet and you have to prepare all those documentation. So any allowances that you're providing, then you have to have proper documentation. Imports. So when you're importing, because these are goods that you are importing into our country, but these imports, they are also having imports declaration forms. So when you're going to claim that purchase on when you're doing your VAT, there's the imports declaration forms that you're supposed to fill. And when you check the VAT filing, it has that portion to declare imports. So you have to declare the imports correctly when you're filing for your VAT. Investment allowances, interest, and air passenger ticketing. So what are some of the eTIMS solutions? So I think eTIMS has been one of the biggest debate, and that's why I always incorporate it. So when you're offering those digital services and you want to raise an invoice, how can you raise an eTIMS invoice? So you can either use the eTIMS And it is very, very simple. Sometimes we are just offering something very simple. So someone, you've done a website for someone, and you're just doing it as an individual. That, like some of you are telling me here, I'm doing bookkeeping to someone. So you can go *22#. This one is for sole proprietor or business owner. You just have a business name, or you don't even have a business name. You yourself doing the business. So it's on the phone. You will register within a minute, and then within a minute you can create an invoice, and the invoice will have the features, the correct features for items. I don't know. I guess I had indicated. I don't know if I had indicated how the items should look like. I'll show you. And so there's also items Lite. That is the web-based. So you can go on eCitizen and you can find it, or you can go to items website and you can be able to get an items invoice. You can go also to items portal. If you go to KRA portal, you find the items portal there, and you can be able to generate an items invoice. And you can do this on yourself, on your laptop or your machine, or you can go to a cyber and be able to create an items invoice. It doesn't require any payment. You don't pay for anything for you to do that invoicing, or a lot of registrations. It is very simple, especially for small businesses. We have items client. So these are software installed on your laptop, desktop. So you also don't have to buy for this. You just need to download it on your laptop. Also you can buy a machine. It also falls under the items client. You can buy the items machine and you can also use it. So items is you can also do online sales control unit. So this is why it's integrated to the ERP that you're using, and the ERP can be online or offline. So you can have the ERP online or offline, and it can be integrated. Of course, the companies that are doing the integration have been registered by KRA. So you have to use the companies registered to help you do the integration. So for integration, these are big companies. They have like 5 or 10 point of sales. You can use it there, or you can even have that one point of sale that you're having being integrated to items, so that you don't do double work. The items is operating as a point of sale. This client who is buying. So it is a platform that requires a bit of an understanding. And some of you have found difficulty of being able to understand the items platform. We are also doing those items training, so we can help you with the installation and training. So it's also able to monitor stocks, is able to monitor all your activities. So after you incorporate items, you can either have items where you're VAT registered, so you are VAT and you're doing items, or you don't have VAT as an obligation and you're doing items. So for people who are issuing items invoices and you're not registered for VAT, this is something that I would want you to note, that KRA has your data now. So if a customer tells you, for you to supply us or for you to do us this work, you have to issue us an items invoice. And actually you go on your phone and you do the items Lite and you generate an invoice. KRA now knows that you have done a business. So come next year, So for you, you're not doing filing every month, but come next year, you have to declare that business income and you do corporation tax for that. So you do business income, then you declare the expenses, the purchases, and you file for correct taxes. So don't just use ITIMS anyhowly, and then next year you file a new return because you've been doing new return. Now you consider doing new return. All along you've been doing new return, yet you have business income. Now with the ITIMS, ITIMS will now show that you have businesses going on. So you have to declare the correct taxes for that. So adhere to ITIMS protocols, pre-population of tax return under ITIMS. So for VAT, there is a pre-population of the VAT return. Ensure meticulous tax recording, record keeping. So with the ITIMS, I believe come next year, because now ITIMS have been fully used this year, there will be so many audits that will be happening. And these audits will be data-driven audits, because ITIMS has provided KRA with the data of all the transactions that we are doing. So there will be data-driven audits. And because of answering those questions, you require to have the correct record keeping. And I keep talking about record keeping. And if you don't understand how to keep your records correctly, bookkeeping for me is very key. So you can also talk to us. There's a time this month, we offered bookkeeping masterclasses, of course. And it is right now, if you want to do a business that can scale in Kenya, you have to keep your recording very swift. So you can have your customized training and you can be able to understand. Real-time transmission of data under ITIMS. So that is, so with ITIMS, there is now the great visibility of compliance. So a lot of visibility of the nature of our businesses, what we are doing. So now they can be able to really view. Automation of VAT registration, I believe this is now something that they will be doing with ITIMS. So the moment you get the threshold of 5 million, the system can be able to automatically register you for VAT. So validation of VAT return declaration against ITIMS. So right now, because of even the pre-filing or the pre-population of the data, now the matching of an invoice and a purchase, now that is a sale and a purchase, now that is happening correctly. And for you to be able to do the e-filing correctly, then you have to offer your PIN number. So some of you are having challenges with the auto-population of the data, mostly because your purchases, the people that you bought from, or your expenses, the people that you bought from, you did not provide them with your PIN number. So provide them with your PIN number, so that when you come into auto-populated data, the data is auto-populated very, very well. So at the moment when you auto-populate the data, or in the spaces where you're confirming that data, so this is how you auto-populate the data. So you come to the filing of the return. I'll share the notes with you. And then you say download auto-populated VAT return. I hope you can see where I'm pointing. My co-host next time, Vincent, next time you circle this space so that we can be able to understand it better. So download the auto-populated VAT return, and then you save it on your desktop. And then this is how the data looks like. This is how the data looks like. So we have the sales and we have the purchase. So you can confirm the sales on your Z report. So you get a Z report from your ITIMS machine or your ITIMS software and confirm the sales. Then you come check your purchases. I believe you're having your purchases file. So confirm all your purchases. So if you find that there are some purchases that they are not here, you can be able to manually incorporate that data. You can manually incorporate that data. And after you manually incorporate that data, you can now be able to file. But when this pre-filing or the auto-population of data was first introduced, we could not be able to incorporate the purchases that was not here. So meaning that there will come a time that this data will no longer be able to put it there. So I would urge you, if you're having customers or your suppliers who are not having your PIN, give them your PIN. Even there's someone who is doing the Eating Light, make sure they incorporate the PIN of the company so that when you auto-populate this data, you get the whole data without you manually incorporating data. So after that, you import the data back and you validate. So it's as simple as that. It's as simple as that. So amnesty is still ongoing. So amnesty is still ongoing, and it is for the period up to December 31st, 2022, and the deadline is next month, June 30th, actually. So it's a month and some days. So you pay the principal amount, and then you get the amnesty of penalties and interest. So for the finance bill, when we were looking at it and seeing what are the changes in the digital marketplace, this is what we found out. That for the proposed changes, they want to include food delivery services. So when I talk about this, I'm imagining this could be Uber Eats, Glovo, how they do the delivery of services, the food. Freelance services. So the freelance services could be you're offering services, online services, possibly bookkeeping, what we do here, professional services. So the same way, possible. I think most of these digital marketplaces have always been there. Sometimes I find the finance bill want to really specify so that it's not ambiguous when we talk about the digital marketplace, that someone can really be able to understand. When we talk about rental services, because I was looking especially for rental, the service could be your marketing different rental spaces online. So people pay you a fee for that linking them from the landlord and the tenant. You're linking them. So there's a service you're offering online. So my sixth sense was trying to figure out what is this digital rental services. So tax-based services, any other services that are not exempt from tax under this act. So digital space can be really diverse according to whatever business that you're doing. But as I mentioned, when it comes to digital service tax, I said it is not final tax, it's an advanced tax, and you do corporation tax. So even if you're having businesses that are combined, there are some digital, there are others that are doing their businesses. Possibly you can sell something online, but you have also a physical shop. I would imagine even if you do the corporation tax, you're still under that cover that you're able to pay your taxes correctly. Digital monetization. So the bill proposed that the withholding paid in respect to digital content monetization be a final tax. So some of you have been able to digitize your content and monetize your content. This could be content in TikTok or YouTube. So the withholding done at that particular point could be termed as a final tax. So this is currently the final is not, the tax is not final. So this is a welcome move to make sure that a withholding paid would be a final tax, so that you don't pay for extra taxes. But this is a withholding tax, not digital service tax, withholding. Digital service tax to be replaced by the significant economic presence tax. Especially, will be done especially for people, for payable for non-resident persons. So this is for non-resident persons whose income from provision of service derived and accrued in Kenya through business carried out over a digital market space. So previously we mentioned that the digital service tax was 1.5%. That was final for non-residents. So they felt that if this person is doing a lot of big business, significance means there's a lot of significance, economic presence. There's a lot of businesses. I don't know how they're going to measure the significance, but they're doing a lot of business in the country. They'll be paid, they'll be chargeable at 30% corporation tax. And that 30% will be charged as taxable profits are deemed to be 20% of the gross turnover, because the system cannot be able to understand. They cannot be able to understand what will be their purchases or their expenses, so that they can do the corporation tax. They are going to deem that all the turnover they have received, 20% is the taxable profit. And then out of the 20%, they are going to charge the 30% corporation tax. So this is for non-resident persons. So a bit of some exemptions on that. So the bill also proposes that the VAT increase a threshold from the 5 million to 8 million. So this is supposed to ease the work of possibly VAT filing to small businesses or VAT doing to small businesses. But I also said, if you're also not doing this, if you're at 8 million and you cannot say, now I'll be doing 8 million and I'm not doing anything else. Remember, there is the turnover tax that is at 1.5% on the gross turnovers. If you don't do turnover tax, you do corporation tax at 30%. And there's also housing levy, that is 1.5%. There's also the payee, the NSSF and HIF, if you're having employees. So even if you're an SME and you are not on this threshold, there's still other taxes that you're supposed to comply with. So this was the minimum requirement for an invoice. Possibly when you come on Friday, I'm going to show you how the invoice looks like. I guess I missed on that. So it should have the name, address, and the PIN of the supplier. Name, address, and the PIN of the purchaser. And this is why I see most of the people are saying, oh, when I auto-populate my data, it is the purchase section, I'm not getting all my purchases. Then because you've not given out your PIN. So let someone has your, give out your PIN, so that when you auto-populate the data, you get the correct data. So there is a serial number of the tax invoice. So when you're generating it under eTeams, there's a QR code. This one I'll show you a photo, because when I show you the photo, you're able to really understand. So let me answer questions. Let me answer a bit of questions. And remember, the eTIMS invoice has all the rates. It has a 16%, the zero rated, and it has an exempt section. So you cannot say that my business is exempt, so I'll not give an eTIMS invoice. No. So it has all those sections. And if you're not registered for VAT, you're not on the threshold. There's also you can still generate an eTIMS invoice that is non-VAT. So let me do a bit of your questions. So on Friday at the same time 10, we're going to learn about navigating modern accounting structures, how to optimize financial management for business success. So we'll talk about accounting structures and how you can be able to even work out your accounting structures and be able to be compliant and still make profits and organize your business in a way that can hear something. So I'm hoping you can see me. Because network. So if you can hear me, you can alert me. I don't know was the network. Okay. So I can see you can hear me. That's okay. So who are we? Before I answer your questions, you ask the questions now. I want to answer them. So we are RWK and Associates, a registered audit firm, and our specialty is on tax. And when I talk about audits and the KRA audits, I always say that the data that we provide KRA is the data that acts as audit triggers. So it is very important to have even your audit report done by somebody or an organization that understands tax implications. So we really have very good packages for audit, for tax, for bookkeeping, for internal controls, which I'm also very passionate about, because I believe your business, you should be able to organize your business in a way that is not stressing you so much. And the processes within the organization are flowing in a way that you're making profits at the end of the day. So we have so many services. You can talk to us. And especially now we have services for audits. If you've not been able to do your audit, we can still be able to do that. And we are quite affordable. So you can talk to us. So there is a link on the chat. My co-host will share. You can do a free calendar booking, or if you'd want anything, you can. There's a link where you're supposed to answer to right there. So I'm hoping it's shared. So we are located in Thika branch. We have a branch in Thika, and we also have a branch in Nairobi, Westlands Road, and we also have our number. You can also pick our numbers and you can talk to us, and somebody will be ready to answer your question. So let me answer your questions now. What happens when landlords don't raise their items invoice? Daniel, don't pay them. Don't pay them their rent, because come next year, you will not use the system was going to disallow that rent expense if it doesn't have items invoice. So also be firm, because at the end of the day, you still need that. You still need that that invoice. So let me also answer. I can see most of you have been answered. I can see most of them have been answered. So Nasibo is asking, I would like you to show us step-by-step guide on how to generate invoices via eTeams for the 4 categories. So Nasibo, possibly you can book the calendar booking and someone will show you, because that's quite some work. And for you to onboard you and to train you for eTeams, you are charging something small. You're charging something small. So we're going to share this. Vincent, Dennis can mute. We're going to share these notes. I'm going to share these notes. So there was a link where you're supposed to fill in so that we can share.
The consultation.
So this is a good one. Nasibo is asking, is there an integrated system for accounting and eTeams yet, like QuickBooks integrated with eTeams? So there are organizations that are integrating. I think the cheapest I've seen to integrate with QuickBooks is charging above 50,000. So you can integrate. At the moment,